Peter, welcome. Thank you so much for joining us here at Risk Minds International. How would you characterise the uptake of artificial intelligence in this sphere, in the risk world in recent times?
Thank you for the question. We see a lot of AI initiatives emerging around the globe across various industries and use cases. And within banking fields in particular, we did a survey together with GARP on adoption rate of AI within banking and risk management. And what came out of the survey is that those banks that have adopted AI, they clearly see already benefits appearing. And we have a number of use cases or processes within banks where more than 50% of banks are already applying AI or are experimenting with. So that's quite some proportion of banks out there, and we see that these AI adoption rates are expected to increase quite significantly over the coming years.
With that rapid adoption come what challenges?
Indeed, we also identified a number of challenges within AI and from the effective usage of AI. And these are typically present in the already problematic area within banks' modeling ecosystem. So we have a particular group within bank that is getting increasingly vocal about AI and is calling for a more cautious approach towards AI adoption. These are the model risk management professionals, and their job is to protect the bank from any losses caused by using of inaccurate models or by improper usage of correct models.
So they do bring huge opportunity, but you've got to have the right people in your team to get the best of that.
Indeed, that is the case, but it's also more, not just the people, but also the processes need to be set up, which are reflecting the complexity and difficulties that come with AI. And also there is a role that technology needs to play. And we did a customer connection event where we invited our model risk management customers. We have 50 plus big banks using model risk management solution from SaaS. And we asked them during a little survey, what is the biggest challenge for you as a model risk management professional within the next 3 to 5 years? A majority of them identified number one is the increasing complexity of models, of AI models. Because for these people, the model risk management professionals, AI is just going to add more fuel to the burning points within the modeling ecosystem. We need to get more data. We need to get more complex data, such as unstructured data. We need to move from simple models that has 15 variables to 150, 300 variables. All these models need to be developed, validated, and deployed. And all this extra work will need to be governed by the MRM professionals.
That was my next question, really, in terms of all that evolution. But at some point, is there regulation that's going to come to bear as well, and how is that going to slot together?
Indeed, that's quite an interesting area to observe, and we have seen a number of guidelines being published. Some of them are even industry generic. So there is a European task force on AI Alliance, which had put together already principles for all institutions and firms out there, not just banks. But obviously banking being the heavily regulated industry, we see, especially around this summer, a number of regulators coming with specific guidelines for financial institutions when they want to work with AI. We have seen Dutch Central Bank, FSA from Denmark, also UK have been very active. So regulators are aware of the benefits. They are even encouraging, in some cases, banks, hey guys, you need to use AI to be more effective in anti-money laundering, etc. But on the other hand, you need to be also very careful.
With all of that in mind, what message do you hope that the people who've come to Risk Minds this week go away with, and what do you hope they learn in terms of what they hear at this conference?
We have a number of presentations during the Risk Minds covering artificial intelligence, how the benefits of AI can be leveraged in various areas. But these benefits do not come for free. And there is also the dark side of AI, but it's another set of models, very complex models that banks have to deal with. And I would like to point out a little bit to people to keep that in mind. And when they are making decisions, how we actually can bring in AI into our bank and how can we leverage the benefits, let's just get things right from the start. Because the regulators will become much more aggressively checking on what we are doing. So let's just set things in the right order. from the beginning that we can explain what is going on in the AI black box. And there are a lot of tools out there, so the concept of explainable AI is there, and we at SET have been very actively pushing that. And that's, I think, one thing that I would recommend people to take away. I mean, there are ways how we can make the AI models more, let's say, business friendly or people friendly.
So wise cautionary words. Thank you, Peter, so much for sharing your insights.
Thank you very much.
Thanks.